The last thing we did was stretch. And the idea with stretch was people said, yeah, I'd like to get 10% bank account instead of 5%, but I don't want the volatility. I don't want to think that maybe the principal would trade up $10 or trade down $10 a share. Like if I buy it and it's trading at 110 and then the interest rates change and it trades to 105, I'll have lost 1 year worth of interest or 1 year worth of dividends. So we wanted to find some way to get to $100 and keep this price right around par, right around 100, lowest volatility imaginable, and extract the yield. Okay, and so the idea of stretch is we don't want duration risk. What Strife has is long duration. That means effectively 120 months of interest duration. That will cause the principal to move up and down, but below or above par a lot. In fact, 1% move in interest might cause a 20% change in principal if you have a 20-year asset, right? So what we wanted to do was strip all the duration off. So not 120 months, we go to 1 month. And when you strip the duration off, you strip the volatility off because the 30-year bond trades much more volatile than the 1 month treasury bill. So we wanted to strip the volatility off when we stripped the duration off. To do that, we had to create a monthly instrument, not quarterly. So we basically took the dividend to a monthly cash pay, and then we had to create a variable dividend rate. So this is the first time in modern capital markets that a company created a preferred stock that has a variable monthly dividend. And so we call that a treasury preferred. We invented the treasury preferred stock with AI. I used AI to do it. Nobody else would have thought to do it because they never had an asset that would justify doing this. In essence, stretch becomes like, it's not quite a high yield bank account because you don't have perfect zero volatility. You know, if you had a $1,082.32, you would get exactly $1,082.32 tomorrow if you asked for it. It's not that, but you would be pretty close, and you could put money in it that you needed to hold for a year with very low volatility. You could collect the 10% dividend. And then if you needed the capital back, you could redeem it into the market and get your capital back. So the idea is a Bitcoin-backed money market type instrument, not quite as good as a money market. They're less volatile, but we wanted to compete with that, you know, with Bitcoin backing it.
Welcome back to the channel. Aaron here from the Bitcoin Bros. That was Michael Saylor talking about the power of STRC. And you can really see how STRC could change the face of finance. It's Bitcoin-backed money. And that's what Saylor's doing with STRC. And the other preferreds are a little bit different than STRC, but STRC will probably be the most popular one. And as you can see right here, what happens when trillions of dollars in capital realize they can earn 10.25% if they park their money in STRC? Understand that there is a massive amount of fixed income capital in the world that's going to come flowing into STRC once people realize that this is actually a thing, that you can actually get 10.25%. And all Saylor is doing, he's stripping the return from Bitcoin and giving that to the STRC investors. So this product has really huge potential to be one of the biggest fixed income products in the entire world. So shout out to the Bitcoin therapist for his tweet there. And then I want to share this with you guys. This is something that I've been paying attention to. So understanding the STRC price, basically when demand is high and it goes above that $101 mark, that's when Saylor and team are going to be selling shares into the market to keep that price stable. And if it goes below that $99, that's when they're going to actually move up the return of STRC. So the return that you get will actually go up. So that's how they're planning to keep it stable. And it's going to be interesting to see how this STRC product progresses in the future in terms of demand, in terms of people understanding what it is. Right now, the market cap is only 2.7 billion. That's definitely going to grow. But one thing I've noticed here just in the past couple of days, the trading volume for STRC has about doubled. If you see the average trading volume here, it's been around 40 million since it's been released. But over the past couple of days, I've been watching this. I've been seeing 75 million, 80 million, 70 million. So it's looking like it's doubling. And it just got listed on Robinhood. So now Robinhood investors could invest in STRC. And this is a lot different from something like an MSTY, where you're going to get 99% back on your money. Those guys are options trading, selling covered calls, and they're trying to give their investors a huge return. This is a lot safer because, like I said, all Saylor is doing is just stripping the performance from Bitcoin, the 30% CAGR he believes that's going to happen over the next 20 years, taking that from Bitcoin and putting it into, or giving it to the STRC investors. So it is a lot safer, and it is super over collateralized. If you look at Strategy's balance sheet, the amount of Bitcoin they have versus the debt, it's around, I think, $11 billion of debt. If you include the market caps of the preferreds with some of the other outstanding debt they have, it's around 11 billion, but they have around $70 billion worth of Bitcoin, somewhere around that $77 billion of Bitcoin net asset value. So it's grossly over collateralized, and even more over collateralized than other products in the market. So these products don't even have a rating yet. They're rated as junk bonds, but if they were actually fairly rated, they'll be AAA rated, and that could be coming soon. And basically, from my understanding, is when these products get rated higher, like say it was to get a AAA rated, there would be more investors that would come and be comfortable to actually park money there. So this is more of a slow game, guys, but it is one of the secret powers of Strategy that nobody really understands what's going on. I mean, if you guys watching these videos, you probably understand what's going on. And people that are in the Bitcoin space, they may understand what's going on, but the average person doesn't really know what's happening with Strategy and with these preferred offerings that they have been creating here. And it's really interesting that he used AI to make STRC. And then you can see here, Strategy is actually up 12 spots. This is the top market cap companies in the US. They are at 106, so almost back in the top 100. If Bitcoin continues to go up and Strategy continues to follow, we'll be back in the top 100. And December 8th is a key date that we have to watch out for, because that is when Strategy could be included in the S&P. And the higher they go on this list, the better. And you can see here the most actively traded US stocks. This was for Friday. Strategy is still up here in around the top 20 at around 4.26 billion of actively traded volume. So still trading with some of the biggest companies in the world. We've seen over the past year, since we've been watching this, Strategy has consistently been trading in the top 20 companies in the United States. You can see where they're rated. They're not rated top 20 yet. That is not financial advice, but I think that is coming soon. And then the next thing I wanted to get into here was the Bitcoin ETF flows. Last week, we had massive inflows from the ETFs, and that's why we saw the price rise. On Friday, we had a $1 billion inflow from the ETFs. BlackRock alone had an $800 million inflow. That is absolutely huge demand for the Bitcoin ETFs. And I made this little spreadsheet here just to put this in perspective. The Bitcoin ETF flows from last week was around $3.2 billion. So that's around 27,000 Bitcoin that was bought from the ETFs. Understand that there's only 450 Bitcoin that come out a day from the miners. So weekly, that's around every 7 days, around 3,150 BTC that are mined every week. So the delta on that, from the 27,000 Bitcoin that was bought from the ETFs, the delta is around 24,000 Bitcoin that is just gone into the ETFs. Now, we know there's not that much Bitcoin left. And I used the Bitcoin price around 120,000 to get the 27,000 Bitcoin bought. So it may be even more than that, because Bitcoin's price was lower in the week and then it moved up. But understand that this is not sustainable. If this continues on for the next 3 months, if we get a delta of negative 24 Bitcoin every week over the next 12 weeks, that's going to be around 300,000 Bitcoin that are taken away into the Bitcoin ETFs. So just understand, if that happens, the price of Bitcoin has to go up, because there's just not that much BTC left to go around for everybody. And then also, I showed you guys that figure of 450 Bitcoin a day. That's going to be around 350 Bitcoin that are mined every single week. But what a lot of these big miners are doing, you can see here, this is Marathon, one of the biggest publicly traded Bitcoin miners. They increased their Bitcoin HODL to 52,850. So they're producing Bitcoin, but they're not selling all the BTC. And you can see that Marathon is not the only one doing it. Kango Group, you can see that they now hold 5,810 Bitcoin. And you can see the list, and it goes on and on and on. BitDeer also, they output 109. They sold 77, but they added 32 Bitcoin. So they're not selling all their Bitcoin. They understand where Bitcoin is going over the long term. So these miners don't want to sell all their BTC. And also CleanSpark, they increased their Bitcoin holdings by 184 Bitcoin. So just because 450 Bitcoin are being produced today doesn't mean that we're going to get 450 Bitcoin back into the market every single day, because a lot of these miners are holding as much Bitcoin as they possibly can. They have bills to pay, but they're trying to accumulate more and more BTC. And then you have Beat Holdings here. This is a little update. They disclosed holding 156 Bitcoin equivalent, or they hold IBIT, but it's around 156 BTC, but they hold it in IBIT. So that is the update for the weekend. Not a lot going on here on the weekend, but I think a lot of people are really frustrated with the MSTR price. So I would say this, guys. STRC, I believe, is MicroStrategy's biggest product. And I think that's going to be their main driver of getting more capital in the door to buy Bitcoin. And I think that's going to be massive for the Bitcoin price. So I think what a lot of people really don't understand is that Bitcoin's price going up is going to be good for a strategy because they hold so much BTC. But just because Bitcoin's price is going up doesn't mean that the MNAV has to go up to 2 or 3 or 4. That does not have to happen. So that is something you have to take into consideration when investing into Bitcoin and strategy. And we've always told people that, hey, you should get Bitcoin before you get strategy. Try to get at least one BTC. Not financial advice. Bitcoin is the hardest asset in the world. Strategy, we believe, will continue to outperform Bitcoin over the next 5 years. That is just our opinion, where we see the market going. But it is good to hold the hardest asset in the world, because even with strategy, you are taking on some risk. What if Saylor comes out tomorrow, sells all his Bitcoin, and says he wants to buy Ethereum? I'm not saying that's going to happen, but you do take on more risk with investing in strategy over Bitcoin, in my personal opinion. So take that for what it is. But I have a clip here, updated Bitcoin price prediction from Tom Lee. Wanted to share that with you guys. And if you're still watching, I really appreciate you. You made it all the way to the end. I hope you found some value in today's video. We have new content coming out every single day. Make sure to hit the subscribe button if you haven't already, and we'll have more content. And I'll see you guys in the next one. Let's go ahead and check out this clip here from Tom.
I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin strong, but now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets.